The Bank of England has cut its base rate to a record low of 0.1%, warning the coronavirus crisis will result in a sharp and a large economic shock.
The bank had just cut rates to 0.25% only a week ago.
The bank, if one really could go to utterly uncharted waters, if the Bank of England was to push rates into negative territory, which is what we've seen, for example, in the Eurozone. We've seen it in Switzerland, Sweden, Denmark and, of course, Japan, the daddy of negative interest rates. So there are still uncharted waters to plumb, but I think the Bank of England has made it very clear it doesn't really want to go to negative interest rates because quite often that does more harm than good. So I think this probably is about as low as it will go. While the interest rate cut is going to grab all the headlines, I think some of the other aspects to what the Monetary Policy Committee have announced with this emergency measure today are equally interesting, not least the fact that they've increased quantitative easing, the bank's asset purchase scheme, by another £200 billion to £645 billion. So that is quite a meaningful move in itself, and it really follows on from some of the monetary easing that we've seen elsewhere around the world. The European Central Bank obviously firing off its bazooka overnight with a €750 billion expansion to its asset purchases. The Federal Reserve in the US last week announcing some $750 billion worth of asset purchases there. And, of course, the Bank of England, Bank of Japan is also buying assets as well. So you're seeing this right across the piece. It feels almost like a sort of coordinated move. Don't forget also there have been interest rate cuts right around the world during the last 24 hours in Brazil, Australia, Indonesia, Ghana and indeed in South Africa today. So you're seeing central banks everywhere cutting interest rates where they can.